And good news for the shareholders in terms of their patience. You join the fray. Dividends aplenty. It's back on the table. I suppose the first question is your recovery complete?
No. We've certainly established some very firm foundations with the improvements we've got. We've reduced the assets by 47%, yet our production's actually up 9%. Costs are down 26%. Return on capital employed 19% against a starting point of 9%. So we've come a long way. Still a lot of opportunities. The next 3 to 5 years, we think we can improve another $3 to $4 billion a year. And so still a lot more work to be done, but we're pleased with where we are today.
Mark, in terms of the debt, I see it, you've made it your priority to keep paying down that debt. Very much the theme that we saw from Glencore yesterday. Here you are again delivering on that front. Is that your number one priority, to still scale down on the debt, or are you remotely in buyer acquisition of asset mode?
Well, firstly, the debt is our most important priority, and we've still got some work to do, but clearly 93% reduction last year, we made good ground. Secondly, repaying the dividends or paying dividends, we've delivered on that promise 6 months early. Good payment. The 40% approach is working with a 13% increase half on half. Yes, we've got opportunities inside the portfolio. We don't need to look outside the portfolio for significant improvement opportunities. So that's where our focus is at the moment.
Well, let's just drill into that a little bit, because I know that you've got copper projects, for example, in Peru. I'm not going to attempt. I think it's Koala. There's my Irishman's pronunciation of a Peruvian name. When are you going to make the decision on this, Mark? You know, are you going to push the button on this in the first 6 months of this year? Give us a timeline.
So what we've got is we're actually reviewing the feasibility study as we speak, just doing the verifications. The project looks very good. Got lots of inbound interest in terms of potential syndication partners, which we'll do for value. And we actually take it to the board mid-year. I certainly don't want to preempt the board's decision on where we go from there, but I would expect some decision during the course of the year, but certainly we'll bring it to the board at the half year.
Can I push you a little bit in terms of the cost? I mean, for example, this was one of the big haranguing points with not just you, Mark, but many of your peers, which was overspend, overblow, I suppose, underestimate, underdeliver, and overspend. So where are we in terms of the possible costs of this project? And is that your absolute banging priority at the table when you say costs, keep a control of them?
Well, I think if you look at our industry, yes, we're enjoying prices, but our cost control has been absolutely critical in the performance delivery that we've improved. Last year, 28% improvement in productivity. So you've got to keep your focus on what you can control. In terms of Quellaveco, the review that we're going through now is making sure that there are no gaps. We've certainly learned all the lessons that we needed to learn in applying those to the new project. So we're not giving a forecast until we're comfortable we've got every angle covered. We're pretty well there. I think it's a good project. Certainly all the work we've done, we're all getting very excited, but we don't want to get ahead of ourselves, and we don't want to preempt the board.
OK, let's draw a line under that there. One big paradigm shift, Mark, is South Africa. Ramaphosa takes over. The new administration made it very clear yesterday. Prudence is the underlying byword. We don't want another downgrade. As you look at the new regime in South Africa, the leadership change, how might that impact your plans for investment? I know you can't make a decision in the space of 2-3 weeks, but your first take.
Look, I think people have got to remember that we've restructured South Africa. We've gone from 31 assets to 17 assets. Our EBITDA margins are strong at 35%. Our cash flow for the year, $2.3 billion, and our returns are 23%. So we've got a great position in South Africa. We're very encouraged with all the noises from the new leadership. They've reached out their hand to the mining industry and to us as a company to come and talk, and let's see if we can get policy certainty. So I'm optimistic that we're in a very different place in terms of those conversations, but still a way to go to make sure that we've got real policy certainty and a foundation for long-term growth. We all want to make sure that South Africa is successful, and as a company, if South Africa is successful, we're successful.
You have the billionaire Anil Agarwal building a 20% stake in the company. How close are the conversations with him? What do they want? Do they want to be, you know, do they have a clear agenda with you? What are those conversations like?
Well, firstly, we don't normally talk about our conversations with shareholders, and with Mr. Agarwal, we prefer to keep the same counsel. From our point of view, you've heard his public statements. I think you're better off asking him his question or the question about his intentions, but it's been very cordial, very positive, no different to any of our other shareholder conversations. It's good to see he's supporting the strategy.